Okay, welcome back. So we're going to move on to the last part of the 2004 higher level cash budget question. And the last part is part B of the You Are Required to section, which says prepare a budgeted profit and loss account for the 6 months ended 31st of the 12th, 2004. So two things to say about that first. It's not a budgeted trading profit and loss account. So the format is a little bit different to the trading profit and loss accounts that we're used to, where they have a trading account at the start with sales less cost of sales, which are made up of opening stock plus purchases less closing stock. So it's going to be slightly different to that, but overall much the same. The second thing to say is that unlike the cash budget where you put down, cash coming in and cash coming out at the time of the cash going in or out, the profit and loss account is going to be based on the accruals concept where the moment for instance, the sale happens, whether you receive cash or not at that time, the whole lot of that sale is counted. And the same thing goes for things like depreciation, where it's a non-cash expense that will all be counted as an expense for the period as well. So those are the two main points. And I suppose after that, we just get started. So I just put on the heading already here. Budgeted profit and loss account for 6 months ending 31st of the 12th of 4. So just like any profit and loss account, we'll start with sales. And because we're counting all the sales that happen during 6-month period, regardless of whether or not we've been paid for them, regardless of whether they're cash sales or credit sales, we can just take this figure over here, this total sales figure for the 6 months, and put that in as our sales. So 3689000. So we just need two columns here, and so we're going to put this in the second of the two columns. 3689 was it 000. Okay, next thing is less cost of sales. There's a heading, and the first thing is going to be your purchases. Okay, and again, because this is different to the cash budget, we're just going to count everything, all the purchases as they occur, whether they're credit or cash. We can take this total figure of 2108000 as our purchases figure. So we're going to put this here, 21, just say it was 08000. So that's our purchases. Next thing is going to be, well, if we're wondering what else to put in, we pretty much can go down through this payment section and then maybe tweak it a little bit, but pretty much we're putting all of these things in our cost of sales. So our next thing is wages. And our wages is just going to be, well, it was 45,000 a month, and there are 6 months here, so we're just going to take 45,000 and multiply it by 6. And that's 270,000. So our wages, 270,000. Next thing on our list over here was variable overheads, so we're going to put them in. And there are two methods of calculating the variable overheads. You can either add these figures up, this 75,000 plus 84,000 plus 88 plus 90 plus 94 plus 96, or you can take the total sales figure, which was this 3689000, you can divide it by 70 euros to work out what the total amount of sales in units was, and then you can multiply that by 10 euros per unit. So you can do it that way, or you can just add up the figures you already have. I'm going to pause now and calculate it. So that came to 527,000 variable overheads. So the next thing from this was our fixed overheads. So our fixed overheads. And our fixed overheads were 51,200 per month for 6 months. So we can just take that figure and multiply by 6. giving us 307,200. And at that stage, even though we have more items inside here, at that stage that's all of the, if you like, expenses or costs that we use to calculate the gross profit, and then we'll put in the rest of the costs then to try and calculate the net profit. So totting up all of that, again I'm going to pause this and add those up. So that came to this plus this plus this plus this, all added up comes to 3,212,200. So that's my total cost of sales, if you like. So I'm going to subtract that then from my sales figure to give me my gross profit figure. So when I subtract that, I get, let's get the calculator out here, 3689 000 minus 476,800. 476,800. That's my gross profit. Okay. Now, you have additional, excuse me, costs that need to go in. If you remember, the fixed overheads originally had included depreciation, but we took the depreciation out because it wasn't a cash expense. Well, for a profit and loss account or a trading profit and loss account, we do include non-cash expenses such as depreciation. So we are going to have to take depreciation away from our gross profit figure with a mind towards calculating our net profit figure. So depreciation, and if you remember when we were doing our depreciation calculations down here, it worked out at 800 euros per month, and if we've got 6 months here, then it's going to be 6 800s, which is 4,800. That's your depreciation figure for 6 months. So we can take that off. Now before we do that, we might also get another expense that I suppose is not listed in here but is still an expense that needs to be included, and that's discount allowed. So discount allowed, when we calculate it, we'll add it to the depreciation expense and then subtract both of them together from the gross profit. Now how we calculate the discount allowed is the discount allowed was discount that you allowed, the company allowed, on any cash sales that it did each month. So if we wanted, we could calculate the discount allowed for July and August and September and add them all together, or a quicker way would be just to take the total sales figure here of 3689000, work out what proportion or how much of that was cash sales. Well, we know that 30% of sales will be for cash, so we could get 30% of this figure. And then we know that the cash discount was 5%, or the discount allowed was 5%, so we could just get 5% of whatever we got there. So that's what I like to do. I'll just write the calculation down here so we can see it here. It's the total sales were 3,689, and we're going to multiply that by 30%, 0.3, and that gives us a 106,700. So that's 30% of the total sales. So that's all the cash sales, if you like. And then we gave a 5% discount on that. So if I multiply by 0.05 to get 5% of that, gives me 55,335. And 35. So again, I'm showing the workings here for your benefit. You don't really have to show the workings up here because there's usually only about 1 mark going for it, well, maybe 2 marks, I guess. So it's not really, it'll probably waste more time than it's worth. So it's 55,335, and then if we add these two together, we get 35, 610, 6, isn't it? 60,135. And subtracting that then from our 476,800. Be careful and do this in the calculator. 800 minus gives me 416665. Okay, so the next thing then we want to do is, after having taken away those expenses, we add any gains, and a gain in this case, without going through too much detail, but the gain in this case that we are looking out for is discount received. And if we go back to the question, we see in the purchases section that we did receive a 2%, or the business receives a 2% cash discount for all of the purchases, the credit purchases that it pays off within 1 month. Okay, so discount received. And it's a similar calculation there as well, where we will take the total figure for purchases, 2108. Okay, and we can see that purchase will be paid for 50% in the month after purchase. So if we got 50% of that and then get 2% of that 50%, and that would be the cash discount. Except there's one slight difference there. With the sales, right, the discount that we were allowing was for immediate cash sales. So for instance, if we did sales in July and some of them were cash, we immediately gave that discount in July. And same for in August sales, we gave an immediate cash discount in August. But when it comes to the purchases, the company was receiving the discount for paying 1 month after the actual purchase was done. So for instance, if we were working out the discount that was received for these purchases done in July, we'd first get 50% of them, 150,000. And that 50%, if we paid that 50% in August, we'd get a 2% discount. So we'd receive the discount in August for those purchases that we made in July. And the same for August's purchases, we'd receive the discount in September. September's purchases, we'd receive it in October. October's purchases, we'd receive the discount in November. November's purchases, we'd receive the discount in December. And for December's purchases, we would receive the discount in January. So December's discount is in January, so it's not to be included in the profit and loss account for the 6 months that end at the end of December. So the slightly different approach we take this time is, instead of taking the whole 2,108,000 purchases figure that we get for the total for the 6 months, is we remove December's purchases. So we subtract that first. 384,000. We subtract that first. That gives me, 1 second now, 1,724. Okay, so then what we have left then is the purchases for these 5 months. And those 5 months purchases, we will have received all of the discount that goes along with those purchases by the time the end of December comes. So what we can do then is just take that total purchases figure for that 5 months, divided by 2. So divided by 2 over here is 862,000. And that's the amount of purchases on which we, or the company, received a 2% discount. So we get 2% of that to figure out what the actual discount was. So multiply that by, and 17,240 is the discount. So putting that in here is our discount received. As I said before, that is a gain. I mean, that's a discount that the company received. So that increases their profit when they when the company receives a discount. So we add that on. So 17,240, add it on to the 416 we already have, 416,665, and it gives, oh, 1 second, plus 17,240, 433,905. And then the last item then in here is just, if we go back here again, is just the interest figure of 417,000 per month now, or 417 euros per month. Now we have to be very careful there, because ordinarily, if that was an exact correct figure, then all we'd have to do is take those 6 interest payments and add them together, or take one of them and multiply it by 6, and that will be our interest for 6 months. However, the thing is that that 417 euros is not the exact amount of the interest repayment. If you remember, when we were calculating that on the calculator, we got something along the lines of 416.6 repeating, 0.6666666, and we rounded it to 417. So the 416.6 repeating is the exact amount. This 417 is just an estimate based on rounding. So just to show you what you would get, if we just took that 417 for a start and multiplied it by 6 for 6 months, we get a figure of 2,502 euros. So 417 multiplied by 6 is 2,502 euros. But watch what happens when we go back and just recalculate the interest again. From the very beginning. So if we take the loan was 50,000, it's 10% per year. Okay, so if we go back and we do 50,000 multiplied by 0.1, because that's how we work out 10%, it gives us 5,000. If that 5,000 is for a year per annum, then for 6 months, which is half a year, if we divide it by 2, we get a figure of 2,500. So the exact amount of interest that we owe for 6 months is 2,500, not 2,502. This is based on the rounded figure. Like if we had taken that 416.666 repeating and multiplied it by 6, we should get this 2,500. But I think it's easier just to go back and recalculate again. So that 2,500 is actually our interest figure. So we'll put it in here, less interest. $2,500. We're subtracting that, and so what's that? 405. That's a 1,431,405, and that's going to give us our net profit, or just our profit, if you like. And that's how it ends.